So, on to our next session. FinTech is all about establishing or challenging the establishment. But what happens when the renegade challengers mature? How do the neobanks keep disrupting, embrace new areas of innovation, and respond to the next generation of challengers? We're going to hear now from the disruptive leaders in financial services over the past decade. Mark Mullen, CEO of Atom Bank, Valentina Kristensen, Director of Growth and Communications at OakNorth, and they're going to be speaking to Paige, McNamee, Senior Reporter at Finextra. And speaking of the next generation of disruptors, also delighted to welcome Leo to the stage. So, please welcome.
Head talk, check my nails. Baby, how you feeling? Head talk, check my nails. Baby, how you feeling? Feeling good as hell. Baby, how you feeling? Woo, girl, need to kick off your shoes. Gotta take a deep breath.
Hi, everyone. My name is Paige McNamee. I'm a senior reporter for Finextra, and I'm very lucky to be joined by Mark Mullen, CEO of Atom Bank, and Valentina Kristensen, Director of Communications and Growth at OakNorth. And of course, the star of the show is little Leo. So it's very exciting to have such an important member of FinTech on stage with us today. So we're talking about neobanks and whether they're still challenging and what that means in the context of today. So last week and this morning, we all heard Janine Hurt make efforts to distinguish the status of the UK FinTech ecosystem with that of European ecosystems. Adding that initiatives that are gaining attention in other hubs, things like, Station F, Xavier Niel's baby, as opposed to the UK, where there are players that are becoming much more substantial parts of the financial services system, whereas, compared to the newer players elsewhere. She argued that there would be a nod to the fact that the UK is in a much later stage of the game, which brings us back to the title. Does this maturity mean, therefore, that neobanks or challengers in the UK are no longer in the early stages of innovating or challenging? So, perhaps in order to better understand the challenge, we should first look at some of the internal practices or strategies that have become the norm in challenger banks. Valentina, obviously you've brought Leo along with you today. Would you say that cultural initiatives being adopted within neobanks are forcing incumbents to reassess their own approach to culture and internal management?
So I think for some institutions possibly, but for the most part probably not. I mean, most recently, obviously just last week, JP Morgan sort of said to their bankers, you have to be back in the office 5 days a week. That's sort of an order, not a request. But I think what it is doing is it's certainly changing people's perceptions of what it's like to work in financial services. Certainly, I think back to when I started, and I wouldn't have pictured coming to a financial services conference and seeing a woman with a 3-month-old strapped to her, or a CEO of a bank that that is championing a 4-day work week, for example. I know Atom Bank's been one of the pioneers of that and seen huge success with that, which I'm sure Mark can elaborate on. So I'm sure it's really changing the way that people think about working in financial services, and as a result, the pool of talent available has got much bigger, because there's probably a lot of people who are saying, I used to think financial services was, working in one of those tall towers in the city, wearing a suit and tie, and clearly it's come a very long way, and it's very different today.
Okay, Mark?
I would make a distinction between the things we've done to innovate in regard to our employee value proposition, which include a 4-day week or flexible working or a whole bunch of other things, as distinct from the things that we are continuing to do to innovate to compete. At the end of the day, a pretty cursory analysis of how big banks, frankly banks in the UK make money, will tell you that 4/5 of their income is coming from interest income on loans. And that's pretty constant, actually, if you go back 5 years or 10 years or 15 years. In fact, fee income's in decline, recovered a little bit last year, but banks make money by charging customers for borrowing. And so, creating a business that's attractive to employees, as opposed to creating a strategy and a business model that's designed to compete in lending, they're not strange bedfellows. They work quite well together, but they're not quite the same thing.
Okay, and I mean, if we're talking about what it means and how we can define success and competition and challenging, and how neobanks are actively challenging, sometimes people tend to refer to market share. Neobanks still amount to less than 10% of the overall UK market share. Do you think that using this as a benchmark actually provides a fair or even accurate reading of how neobanks are challenging? What would be a better unit of measurement? Mark?
Me?
Yeah, please.
Listen, I don't think you should hide against the measure. Some people will say market share is the thing, and that's the measure of success. So the fact that the neobanks haven't necessarily made huge inroads in regard to either customer numbers or volume of loans or whatever unit or scale metric you want to use is a fact. Understand why the fact is. Firstly, one of the biggest banks in the UK wastes no time and certainly spends as much money as they can telling me they've been here for 250 years. So that's quite a head start. And by contrast, most of the neobanks in the UK are very, very junior institutions by comparison. So it takes quite a long time to build anything organically. And the neobanks and challengers that we're talking about are organic businesses in the main. Whereas actually the big banks that dominate the UK are not organic businesses. They've grown serially by acquisition over many, many years. In fact, many, many decades. So it's a bit too early to call. The fact that we're small relative to the titans doesn't make the titans quite as strong as they look, because many of them very inefficient. They don't necessarily deliver customers. They're not necessarily trusted. It's just that there's quite expensive hurdles beyond branch banking networks and technology infrastructure that you've got to overcome in order to compete on the level playing field.
What about, say, the number of listed institutions in the UK? I mean, Atom Bank has talked about going public for a little while now. Do you think that would be an effective unit of measurement?
Oh, I'm not sure. I think you have to have a great business that is trusted by investors before you get to that sort of moment in time. And I think you should focus on having a great business first. And listing is a choice or a stage of growth. It's not necessarily the point. And so I'm not sure that it's a measure that I would use necessarily to sort of as a barometer of competition.
Oh, fair enough.
Yeah, I mean, I would agree. I think market share is one thing, but if you look at OakNorth's cost to income ratio, our return on equity, I mean, they're miles better than any of the big five. You look at the net promoter scores of most of the challenger banks, and even just so many of the features that were introduced by challenger banks. Whether it was Atom, Monzo, Revolut, OakNorth, Starling over the years, so many of those have been copied, right? So much of that innovation has been copied then by the large banks, because customers have now said, that's the sorts of user experience that they're demanding. So it is helping to drive that innovation even from some of the largest players. But as Mark said, they do still have the burden of legacy. I mean, if something happens in our IT system, we can rebuild our entire core in 5 hours in a new location, which is just not something you could ever do, if you were one of the large banks. So, so I think there's, we've definitely seen some of that innovation coming, and some of those, copycat features. But I think there's still a long way to go before you can say that the challenger banks are really offering a genuine challenge.
Yeah, no, that's really clear. So given the wider climate following the collapse of SVB earlier this year, are you concerned not only about uncertainty impacting neobanks' ability to focus on innovation, but also about the underlying strength of the sector? Valentina, I'd like to start with you on this one, because CEO of OakNorth, Rishi Kola, had said that opting for HSBC to make the SVB purchase was actually a lost opportunity for UK ambition.
Yeah, so a little bit of background there. You would have read in the news, obviously, that SVB was acquired by, or SVB UK was acquired by HSBC for £1. We offered 100 times more than that, and didn't get it. But no, I mean, the way we saw it was, obviously, OakNorth Bank is a bank that launched for entrepreneurs by entrepreneurs. High growth businesses are the types of companies we've always worked with, so there was some clear synergies with SVB. And totally appreciate the decision that was taken with HSBC. Obviously, a much safer bet. From a liquidity perspective, they're obviously a huge institution. They've acquired numerous businesses in the past in both distressed situations and not. But I think when we're trying to look at the UK outside of the EU, we're trying to pave a path where we'll continue to dominate in FinTech. Then perhaps the safe choice isn't always the best choice.
Fair enough. How do you feel about that, Mark?
Which bit of it? The HSBC acquisition of SVB,
Yeah,
or the?
let's start there.
Well, Is it better than recourse to taxpayers for bailouts? Yeah, probably. So clearly not in the game. So I don't know what the inside conversation was, but I can certainly see how it's troubling that it doesn't necessarily create diversification. It creates yet more consolidation. And if you learned anything from SVB, you would have learned that concentration and a lack of diversification is pretty bad for banks, and I think it's pretty bad for banking. So I think more smaller banks is actually better in the end for not just competition and customers, but it's actually better for the UK because it's more stable, fundamentally more stable and more diversified. This idea that big banks are somehow or the other better or more stable, I just fundamentally challenge. They're the ones that we paid to bail out a number of years ago, and we're still paying, and we'll still be paying in 10 years' time. So I'm not going to forget that anytime soon.
No, of course. And I mean, part of the wider SVB fallout has been discussion, particularly over the weekend, about the possibility of reviewing the FSCS, the Financial Services Compensation Scheme, from an £85,000 limit, which would potentially be quite valuable to certain SMEs. But how does that make you react as neobanks? Would you like to start, Mark?
Sure, listen, there's both a rational and an emotional content to that. If you looked at it from a retail deposit perspective, then the vast majority of customers would love to have a problem of having more than 85 grand in cash to stick with a bank. The reality of savers in the UK is that they're a massive way short of that. So it's not really addressing a fundamental risk in consumer deposits, but it sure as hell is addressing a risk, both emotional and practical, when it comes to SME loans. My advice would be, if you look at counterparty risk, then third parties need, whether they're banks or not, just need to look at third parties, and again, diversification and portfolio management, generally, husbanding your capital and making damn sure that you've not got all your proverbial eggs in one basket is a good thing. But if as a backdrop to that, the FSCS limit was extended and raised for SMEs, I think it would be pretty much a good piece of news for the sector.
Yeah, I would agree with that. I mean, I think obviously there's going to be capital requirement implications for banks like ourselves, so we'll have to see kind of what comes out of the consultation. But as Mark said, obviously for those SMEs, I mean, in the US the limit's I think about $250,000 that's protected, so it's quite a bit more than what we have here in the UK. And I think the FSCS limit was set a decade ago. I mean, it's potentially time that we looked at a change in regulation, because obviously it's much easier today to make a run on a bank than it was a decade ago. Now it can be done, as we saw, in as little as 24 hours. So potentially it's a good thing to be looking at how we can refresh some of those, some of the things that we introduced back then.
No, thank you. That's really interesting. And just to wrap up, because I know we're about to run out of time, if you could just give us one sort of key area or focus that your respective banks would like to be focusing on or are sort of targeting in terms of their ability to stay focused on embracing new areas of innovation and remaining, leading challenges in the space.
Sure. I mean, I was thinking about this question because 10 years ago, what we would call a challenger bank was Metro, right? It was the first new bank in 150 years. And what they were doing that was challenging was coming to market with a bricks and mortar led model where they would be open 363 days of the year, much longer hours than a traditional bank. And you could bring your dog and, the kids could play with the money counting machine. Today, if you said that was a challenger bank model, people would look at you like you were crazy, right? Because a bricks and mortar model would seem totally like the antithesis of what you would expect a challenger bank. So I'd kind of say just keep doing what you're doing. The focus should be on building resilient business models, so that you can stand the test of time. We've obviously seen that. Diversity in your revenue streams. As Mark said, that that's really important as well. So I would say, diversification, building strong, resilient business models, so that you'll still be here in another 10 years' time.
No, that's perfect. And Mark?
Well, what's the point of the technology? For us, it's about faster, easier, better value for money. At the end of the day, it's money. So it's an emotional construct, but you should be looking to bank with somebody who's paying you as much as you can possibly get on your savings and charging you as little as you can possibly pay on your borrowing. And anything else, you really need to be able to weigh the value of it. And for me, technology is about just making the whole damn thing more efficient.
No, that's really great. I think that's a great note to finish on. So thank you both for joining me, and well done to Leo as well for making it through that smoothly.
Thanks.
Oh,